Hey guys, welcome to my channel. I'm Greg. I'm going to go over some boring charts today. So if you're not interested in the boring charts, you go ahead and click off the video. It's not really going to be, it's going to be related to cryptocurrencies because these charts actually matter. They're probably more important than actually the cryptocurrency charts because the cryptocurrency charts are not going to start going up until this stuff is all resolved, more or less, if you will, in what's going on with these charts. Okay. So here's the deal, guys. I've been trying to relay to those that are new to my channel. I've been trying to relay to those through either Twitter or on my channel, my position on what I think is going on. And I think that there is a very good probability that there's probably going to be, in my opinion, in the equities, like the NASDAQ, the S&P 500, and in Bitcoin, that there is going to be another wave up driven by fear, more or less. With Bitcoin, it's going to be probably a FOMO fifth wave up to probably about $70,000. There's one that thinks it's going to go up to 100. I don't know about that. I don't want to get too aggressive, but I think that's going to actually happen. And there's a probability. There's a probability that could happen. And then also too is that after that wave, and those do happen with the S&P and probably the NASDAQ, that after that will be the crash, and that will be the actual recession. So with the S&P 500, it more than likely it will be going up. It could just be like a corrective move, like a massive X-wave move up, and then it does it. And then more likely, looking at the NASDAQ, I have to look at the chart closer. It'll probably be a wave. But this right here, guys, is the 10-year over the 2-year, or the inverted yield curve that you might hear from time to time. Okay. And typically what happens, people will say in the media, when the 10-year is inverted to the 2-year. So the 10-year is, the 2 years interest is higher than the 10s. Okay. So what happens is that becomes inverted. You don't want it inverted. So now we know it's inverted. You can see this negative number down here, right? So it goes down. When the recession will hit is when it goes up. So if you come over here and look, here's 2006, here's 2007, and you can see it starts trending up. And once it starts doing this, this is called the steepening yield curve. Once it starts doing that, that's going to be the recession. As you can see, they can hang out down here for some time, months, and sometimes almost years. So you can see here, March of 2000, and then it goes all the way into January, February 01, and then it starts steepening. It goes back up. That's when the recession is going to hit, okay? In my opinion, just going over this charts, that's when the recession hit right here, guys. Right in here was a recession when it went up like that. If you look over here, January 2000, okay? And it stayed down there for a little bit, for about a year, and then it went up. And that was the recession everybody was talking about, right in those areas, right in that areas. And more than likely over here is going to be the same thing. It'll be down here for a little while, and then it's going to go up like this. And that will be the recession, in my opinion, just going based off the charts. All right, too. And now going over the 10-year, okay? The 10-year is usually the market's gauge of the inflation going up and the interest rates on the 10-year. As you can see with the 10-year, guys, take a look at 10-year treasuries here. It's in a massive bearish divergence. When these come down, the market's going to realize all that, hey, maybe inflation has peaked. Maybe interest rates they'll be going up, but they'll start realizing it. And then the market will start going, oh, okay, we can start making another run. That's what I think is going to happen. That's what the 10-year treasuries are telling us right now. Okay, guys, just going off this, they have peaked. This is a topping pattern. Look at them right now. Okay. It's a topping pattern up. Here's the third wave. It's in a fifth wave. 1, 2, this could be the fourth right here. This whole thing could be the fourth right here, and then up for another one. And then it's going to come back around, guys. That's what I'm going to see. It's going to happen right there. That's what's telling me that I think these will trend down like this, just like in a move like this. Okay, guys, these are going to trend down in a move like this. Okay, a little bit, and then maybe down, and then down a little bit more, something like that. And then this will be the area where the markets will go up, in my opinion. So just to let you guys know that. Okay, this is the next chart I wanted to go over. That's going to be important here. is like, what is oil doing? It's actually on a trend down. This is probably one of the better gauges of telling you whether inflation has peaked or not. You're already starting to see news articles out there going, oh, gas prices are starting to go down. We might see $4 by the end of summer, according to the article that I saw in the media. And then all the other guys that are about doom and gloom on the YouTubes that promote all that, which, hey, look, I'm all for promoting, making sure people are aware of what's really going on to be able to protect yourself in case of a bad event. But just to keep on going, that this is the time, that this is the end of the economy. This has been going on since the 1980s, guys. I remember, it could have been going on before that, but since I was growing up, since I was a kid, since the 1980s, I remember it. Soldier of Fortune come out. It started from the recession of the 1970s, and then you had these groups of guys come out and said, "Oh, you got to get ready for the end of the economy. The United States is going to collapse. It's going to collapse." Look, I think the United States is going to go on for quite some time, guys. I really do. I mean, you really think that, like in 2023 or 24, that we're all going to be living in tents and having campfires in the woods and stuff and going back to the Stone Age and living like, cavemen again? I mean, think about it, guys. We've been, the human race has been through some pretty bad times, man. We've been able to make it through some things. You think about it realistically. Come on, now think about it. So, I mean, at the end of the day, like, how much more can you prepare? So, like the guy says, he's got a safe full of gold. I mean, at the end of the day, your gold's going to run out. I mean, how much can you have? You just can't sit back and go, I got all this gold, and then I'm just going to use it to go buy my stuff, and I'm going to be the new king. No. Here's the thing. If there's no currency and you're just trading, the only thing you're probably going to be able to use is your labor. You're going to have to go labor for it. Most people have to labor. Says, hey, I'm going to go fix this, and you give me this. That's what's going to happen, guys. We'll figure things out. It's not a big deal. I mean, it could be a big deal, if you're not in a house and stuff like that. But I mean, think about it, guys. Just use a little common sense. So here's the thing that's going on with the oil is it's probably going to be trending down. It looks like it's going to a trend and doing a massive correction. So once the market realizes that inflation has peaked, once they really go, hey, wait a second, guys, maybe inflation really has peaked, okay? And the DXY, which I'll go over in just a second, then guess what? The buyers probably start coming in. The buyers will start coming in, okay, on the oil. So the oil is going in the right direction. Not to say you can't rule out this is a fourth wave and it's going into a fifth to drop everything back down. That could happen to bring Bitcoin back around. Here's another boring chart that nobody likes to go over, the DXY. The DXY is in a topping pattern. You can see the bearish divergence from here, and then the third wave peak over here. So the divergence right there. The DXY is in a topping pattern. And I really do believe once this peaks and it starts trending down, Bitcoin and the risk on assets will have less of a headwind, guys. They'll have less of a headwind. Okay, so part of putting this all together, the inverted yield curve is down. It's not steepening yet. DXY starts trending down, oil down, peak inflation, market starts realizing peak inflation is probably there. And if the Fed raises 75 basis points, it is going to blast it. Now, I know there's an issue with the housing market. There's a big time issue with the housing market, and that's going to go through really quick. We're going to go over USDC coin, guys. And USDC coin is in a topping pattern, in my opinion, right here at a third wave. Okay. USDC coin is in a topping pattern with a third wave peak. And then everybody, there's going to be a correction. So you can see Bitcoin went up. If you take a look at USDC coin here, this is a USDC dominance chart. Bitcoin was going up. So this came down and made a fourth wave correction. Now it's going to trend up into this fifth wave. Bitcoin is probably going to be doing a correction coming up, probably a significant correction, because the USDC, everybody's going to go back into the coin while Bitcoin's going down. That's what this chart is, inverted relationship to Bitcoin. This goes down, Bitcoin's going up. This goes up, Bitcoin goes down, and it's got one more push. And I think the USDC coin is going to be going into this correction right here. See how this paints a picture for you? What could possibly be going on? Is this going to happen in a week? Probably not. It's going to take it 2 weeks, 3 weeks, 4 weeks. The VIX is still in an uptrend. This is near an uptrend. That's usually not good for risk on assets, even though it's not too volatile. But this is something that you want to see to actually get a bottom. So you can see with the VIX right here, up there, what happened right there on March of 2020. Risk on assets formed the bottom. In this general area, wherever it peaked, right in this area formed a bottom. So this isn't something area. Pay attention to the VIX. And if you see something, boom, like that, the volatility comes up, that could be the bottom forming process of other equities, and including Bitcoin, guys. So I wanted to go over those charts with you. All right, guys. And now that brings us back to the original topic of discussion of this channel is Bitcoin. Okay. So with all that I put together, presented that information about the other boring charts that nobody really wants to listen to or pay attention to. If you put it all together, what possibly could be coming together with Bitcoin right now in this chart with an RSI down here on the weekly chart, the lowest it's ever been, the lowest it's ever, not ever been, the lowest it's been since December of 2018. And over here, of course, if you use another one, it could maybe the RSI data might be a little bit different, but it's still in a low area. Could it swing back around and do another one? That could have been it on the RSI right there, guys. We just don't know yet. But if you put it all together, there's a possibility that somewhere in this area, there's going to be, at a minimum, a local bottom or the bottom, guys. Based off the data that I'm looking at, guys, that's why I'm saying there's a possibility of another minor run up to this area with Bitcoin, in my opinion. Okay, that's what I really do believe has a potential to make another one up, whether it's going to be some sort of corrective bounce or a bullish move up there. It's going to be a wave driven by fear. I'm telling you, it's going to be a wave driven by fear. Just like the commodities markets, when they have a fifth wave run, those are waves that are extended waves driven by fear. And this is what this is going to be, okay? Because the reason too is just what's going on with the macro environment. And then it's going to be the crash, in my opinion, the real crash is going to be after that. That's what I think. That is my thesis, especially with the Fed. They're going to raise rates again. I think 75 basis points. I don't think they're going to do 100. We will see. And that micro environment, and then as time goes on with Bitcoin, it'll be in here. You could say in this general area, it'll be grinding out, and then another month or two goes by. You know, it could be a wave up, a massive correction, and then it could swing back around and then do a wave, something like that, guys. So as an example, let's say Bitcoin bottoms in that area. I'll have a wave run. This run will be kind of like, right over here like this. Won't be that big. And then it'll go up in this area, and that'll probably be about the time where the Fed is going to start becoming more dovish. Because in my opinion, I don't think that the Fed can raise rates higher than 2.5% because of the amount of debt. The amount of debt, guys. It's not going to work. They're going to destroy that. They're going to destroy themselves even faster. And the facts remain is the government does not want that to happen. The government wants things to continue to go on. Don't think about it. The government's like, oh, we want a recession. No, they want people out there working and paying their taxes, and everything comes in. They're a business just like anything else where people run business. They want business revenue, pay those expenses, and go up. I know that's a bad relationship to the government, relating that to the government. But as an example, they don't want it to end. They do not want it to end. Okay, those are the facts. They want it to continue. They're trained to continue on and continue to tax people, continue to fleece people through inflation, et cetera. All right, guys, that's how I see it. And I'm sticking to my thesis until my thesis is not proven. All right, guys, me, I'll end my video. Thanks for watching. Drop a like, hit that subscribe button. Peace.